I'm Andrew Schwartz. I am an insurance analyst at Celent. We're a research and advisory firm. Today, we're talking about how a connected ecosystem can stop claims before they happen. And when I was approached to speak about this topic and moderate a conversation, I was really interested in having the opportunity to really speak on this because of the fact that this is so topical. I saw that NAIC announced actually a couple weeks ago that loss ratio quarter over quarter was actually the highest last quarter than it has been since 2003, any quarter in the last 20 years. So clearly, rising claims costs are a massive problem for carriers, and some tactics like being able to prevent a claim before they happen can certainly go a very long way in doing so. And that's an area that I think holds a lot of promise in the technologies that are offered and the value that they can provide, but at the same time, it's not an area that necessarily has probably, at least in my view, had as much traction necessarily as maybe one would have expected. But I think over time, the technology is there and the value that it provides is there. Just wanted to provide one quick example that I thought was really interesting, and that was last year, there were $17.4 billion in water leak damage from personal lines. So if you're able to find some sort of a tool that's able to prevent or mitigate these damages that typically creep and get worse over time, that's $870 million in savings. And I think 5% is a very modest figure to propose. So it's clear these tools have a lot of value, and we've got a great panel of experts to talk about it, coming from a lot of different perspectives. On my right here, we've got Brent Williams, founder and CEO of Benekiva. We have Paul Primavera, EVP and National Practice Leader at Lockton Companies, a leading commercial brokerage. And we have Alan Demers, founder and president of InsurTech Consulting. It's great for all of you to be with us today.
Thank you.
So let's start by talking a little bit about the current landscape and challenges of claims management. What are the top priorities related to avoiding and mitigating losses? Start with you, Alan.
Yeah, I think there's a lot there. I mean, first of all, I think you have to take a real view of what's happening with insurance carriers, and I think you've set the stage pretty well, Andrew. Losses are probably the top of mind for any claim organization. In fact, I'd say if you're a head of claims, you're probably spending as much time running your operation as you may be analyzing and explaining the performance of what's happening out there. So we came off a really heavy first quarter of cat and weather losses. That was on top of inflation and repair costs. So everything, if you're in the business of insuring people and things, it's repairs, replacement, attorney's fees, legal, medical costs, all of which have gone up. So it's really raising those premium rates. So it's a challenging landscape, and that's not even touching so much into the hybrid workforce and turnover and talent drain. And so a lot coming at the claims team and the insurance carriers themselves. But I think top of mind is, with rates going up, how can companies benefit by taking losses down, and one of them is preventing losses and or mitigating them in the first place. So to me, that's where the priority is.
And I think that's really interesting, the idea that you just brought up about how traditionally the claims department really evaluated a claim once it actually happened in the first place. And now it's almost like we're moving the goalpost back and looking at their mandate as being prevention as well as response.
Yeah, and for the benefit of this conversation, I think we'd all love to see a perfect world where there are no claims whatsoever. That's just not reality. So we'll probably add, preventing and mitigating losses, because that's a big part of it. Getting it early, really reducing what the total impact of that loss may be. And there's things we'll talk about here that are focused on that.
How about you, Paul? I'm sure a lot of your clients are concerned about rising loss ratios and looking for strategies to prevent them.
Yeah, absolutely. So the hard market from a commercial segment is worrisome for everybody, especially in the property space. I totally agree with Alan from a standpoint of pre-loss mitigation is definitely a joint collaboration between insurers and policyholders. There needs to be a greater balance, I'll call it, in regards to identifying the key loss drivers on both sides, because at the end of the day, a loss avoidance program, even with a guaranteed cost program, is going to benefit both that policyholder as well as the insurer. I think once losses occur, the ability to have some stability within the claim staff is going to be huge. There was that whole overturning of staff probably as much as a year to year and a half ago. There's been some stabilization in regards to that movement. But what is continuing to go down the road is, and Alan touched on it, is that social inflation in regards to both expense and cost, right? And so we all hear about the nuclear verdicts. The one thing that the industry really needs to come together and share more information on and develop joint strategies on is how can we come together and help mitigate those nuclear type verdicts, and even the smaller verdicts for that matter, in regards to allowing that. One of the things I talk individually with our clients on is we are seeing those increased verdicts, number one, because of some social inflation, but if you really look at it, the plaintiff's bar is well, what's the word I'm looking for? They're well developed within each other, right? So it's not a bunch of individuals running around. It's a joint development of how they are looking for cases and how they are presenting those cases to juries.
Right. And you don't even work in Florida, so. You have anything to add, Brent?
Yeah, I'm more on the life annuity and health side, but when you look at loss or taking some of those claims and preventing those claims, it's a different type of loss. It's a different type of program. Like on the life annuity and health side, obviously we all want to prevent death, right? I mean, prior to Benekiva, I was an investment financial advisor, and I never sold a policy to one person in my entire practice, a life insurance policy that they hope to use. Nobody hopes to use it. So from a prevention perspective, you're looking at what type of wellness programs, what type of things we can do to educate people on why they want to do certain things or not do certain things. But I think there's two sides of the claims coin. It's one, prevention and mitigation. And to Alan's point, claims are never going to go away. If claims actually go away, then there's no reason to have insurance companies. And in fact, from a regulatory perspective, if you get your claims down to a certain ratio that's too low, guess what? Regulators come in and say, you're not paying enough claims. So claims are never going to go away. To me, I think it's more about, okay, what can we mitigate or maybe prevent? But then also, when we do have claims, what claims can we just pay and get them out of the way, where a human being doesn't have to look at those claims? So to me, it's about mitigation or prevention on one side, but then on the other side, it's about automating that process. Because at the end of the day, you mentioned the talent issue, right? Well, you take a younger generation and stick them in the claims department of any one of these carriers and say, function this, F1 that, arrow up that on a green screen, guess what? You're looking for another job by the end of the shift. So those are things that we need to start tackling from a claims perspective, because at the end of the day, claims aren't going away.
I'd agree with that, but I think we're a very long way away from the regulators looking at there being too few claims. So another point that I wanted to dig into a little bit is I find it really interesting when you look at really the dichotomy between specialty and commercial lines and how they're really using loss control tools, which are not necessarily very new, to how they're now being used in a larger scale way down market for personal lines. And I was wondering, Alan, maybe if you could elaborate a little bit on how these tools have been used previously and how they're moving down market to provide value at scale.
Yeah, I mean, Paul can probably tell us some more on specialty areas, because I think there's a good perspective too. But I think generally speaking, loss control has always been feasible because of scale and the size of losses and the amount of premiums that you're talking about upmarket. So large commercial, big workers' comp, large accounts certainly have all kinds of techniques of training programs, loss avoidance type safety management that's gone on for years, and they can certainly afford the technology. What I think is really interesting is, kind of think of it coming downstream into the retail or personal line space where sensors have become much lower cost. So water sensors that detect a leak or one that shuts the water off are good examples. Telematics for safe driving, crash detection for identifying if there has been an accident and preventing something bad from happening, or dispatching emergency services. So there's more and more coming because the technology is better, it's faster, and the data is more abundant. So now what we need is more adoption. I know we're going to talk about that, but there's still some barriers between the cost of the technology and the policy acquisition costs to make some of those, like in a homeowner example, water shutoff program, could be quite expensive to install a shutoff system. They range somewhere between, say, $500 and $800 installed. There's some cheaper, lower cost versions that just detect leaks. There's some that are really low cost that are quite effective. But getting the consumer aware of those capabilities and actually taking action is still some opportunity area.
Right, and I think it's really interesting that everybody is saying security, security, security. I want to make sure that my house is safe from intruders. But if you just look at the aggregate payouts and claims, I found it jarring that there are 18 times roughly as many payouts in water leak claims than those in security claims. So I think that's an interesting thing to keep in the back of our minds as well, because folks are clearly focused on home security and looking at anecdotal stories of that big bad invader, but at the same time, what's really damaging their pocketbooks and their livelihoods is a cause that might not seem as nefarious necessarily, but at the same time is at the whole leading to a lot more damage.
Yeah, water damage to homes is the number one cause of loss, aside from weather and catastrophe.
I think part of it's an education factor too, because at the end of the day, as a normal P&C auto and home policyholder, I think a majority of the consumers out there just put it in the back of their mind as, if I have a water leak, who cares? Insurance company's going to pay for it, right? So I think it's not only education, but it's also changing and shifting the paradigm that this is better for you. If we prevent these losses, then how does that lower the premiums? I think part of the problem is when you do engage some of those items and you don't see the premiums go down, then it becomes a consumer issue.
And I don't mean to pick on you, Paul, but we were talking earlier, and you're somebody who's clearly pretty involved in the insurance space, and I asked if you use a water leak detector, and you said no. So, I mean, clearly, if you're not adopting it, there are a lot of other people way less involved that aren't as well when they know the risks.
Thank you, Andrew, for outing me on that. It's
Hey,
funny
I use Apple Health, by the way.
Is your agent in the audience?
I don't think so. It's funny because when Alan was just giving that answer, I said, "Geez, I told Andrew I didn't use a water sensor in my house, but I do have a security system, which is interesting." Here's one thing to think about, and Brent said it. And it really lies in regards to how I look at this as well. So again, my view is commercial space. If you just look at commercial auto, right, and in that commercial auto space for large transportation companies, the issue has been for several years the cost of insurance is going up, right? That's one element of it. The actual ability to get what I'll consider to be adequate excess limits. There's an issue in regards to being able to get that even on an international basis, right? So forget domestic carriers, but going into the London markets. Not until that happened did transportation companies then say to themselves, what can we do, right? Because when you look at that, when that insurance is scarce, what happens? The price goes up, but you also have to take a larger retention. So retentions in that space of $10 million, $20 million is not unheard of. So at the end of the day, that is all affecting your bottom line. I think I was telling Alan a couple of weeks ago, the ability to have safety devices on those vehicles, mainly tractor trailers. That's a necessity, That's not even an option anymore. And I think and we're already seeing it, and I don't know the personal line space well other than not having a water sensor in my house. But if you look at states like Florida, for example, which is increasingly becoming uninsurable if you live there, those devices are going to be almost required from a standpoint of just getting into the game, right, for it. So I think not until, and I hate to say it, not until we get to that point are we going to see a real increased use of it. The other aspect of it is, and we'll probably talk about this a little bit later, is, and Alan said it is, there's a cost in regards to putting that in. But the cost benefit isn't always translated in regards to if you do X, you will receive Y. I think the industry needs to do a better job in regards to that reduction.
So I think there's two interesting points here. Clearly, reaching that critical mass is important, where you have that data and you have scale in order to make these tools effective. In many ways, it's dependent on more folks than just yourself and your individual driving behaviors. But I want to address maybe the most interesting story I've heard recently about telematics in the personal auto space, and that's how Progressive has gone downstream to the personal lines, and that they have this crash management program where they are basically, if I understand correctly, mandating that everyone use these tools to detect their driving behaviors.
Yes, so what I understand, I don't know if everyone saw that, was one of the earning reports that Progressive had, and they've always been a market leader. Anyone from Progressive here? Progressive background? No? Okay. But I think we all know they're a leading company. They continue to take market share. They continue to be one of the more profitable companies out there. And they've always had a penchant for getting after claims really quickly, early settlements. Remember the days where they had the Progressive vehicles and they'd show up at accident scenes and they'd get information and try to settle claims real quickly. So that they discontinued that program a while ago, but they've always been leading in that space. So recently what they announced, in addition to their usage-based insurance programs, is they're making available to all their customers a crash detection feature. So it's a mobile-only option, so you don't have to be tracked in your driving behavior or sign up for UBI, but you can get the benefit if you've been in an accident. And I think that's a bit of a game changer because that helps really promote the adoption. So we'll see how that goes in terms of marketing.
Is it available or strongly encouraged?
Making it available. I haven't yet seen if it's going to be, I don't think mandate that'd be a bit strong, but I think we'll see how highly promoted it is.
Right.
But again, a carrier of that size taking the first step, and they're not the only company doing it, by the way. So,